Folks, today I want to talk about momentum picking up on two chip stocks. Now, over the last several months, chip stocks have been in the spotlight due to the ongoing shortage impacting several industries, especially in the technology and the automotive space. Every day, more and more items involve chips to function. Think about it. Cars, TVs, even refrigerators and microwaves these days rely on chips. Everywhere you look, chip stocks, clocks, radios, everything. Even this fan has chips in it. The world is becoming more automated, and smart homes and offices are a reality now. Now, as far as the future, there's the Internet of Things, machine learning, even increased consumer demand when combined with the spending we're about to see from the post-pandemic surge in demand, especially with electric cars becoming part of our everyday lives. It's going to create another demand for chips in the coming months, just like we're seeing one right now. So if you look at the performance of the SMH ETF, which tracks the semiconductor index, we've seen gains of over 100% over the past 12 months. And with the inflow of capital moving into the market and the stimulus money providing more liquidity, I'm expecting that much more upside, specifically in the semiconductor companies that are technically breaking out right now and have strong fundamentals to back up aggressive expansion and growth into new territories. Now, there's two companies that have been making headways over the past several months, and I believe they're both positioned for more upside momentum in the months ahead. First company, Kulicke Sofa Industries, ticker symbol much easier to pronounce than the name, KLIC. The company is a leader provider of semiconductor packaging and electronic assembly solutions, supporting the global automotive, consumer communications, and computing and industrial segments. Industrial segment, big one there. It generates most of its revenue from Asia Pacific region, which gives you a good little diversification. Revenue showed a hefty 85.6% year-over-year increase, climbing to $267.9 million. Net income jumped 187% year-over-year and reached $53.7 million. The earnings per share followed a similar pattern and was up by, get this, 196.6% to hit 86 cents. The company's making headways. Cash equivalent were at $576 million plus. And end of the year, 1 year return, 149%. Your earnings per share growth versus previous quarter, 196.55%. Earnings per share growth versus previous year, 258% plus growth. We've seen 3 quarters of positive earnings estimates, and price target is $65 per share over the next 10 weeks, assuming momentum levels can continue at the current pace. Next stock is Texas Instrument, ticker symbol TXN. Texas Instrument Incorporated is a global semiconductor monster. It's designs and manufacturing company that develops analog and embedded processors. It's got 14 manufacturing sites worldwide. It's got chip group provides 80,000 products for over 100,000 customers. Man, that's huge, which mostly comes from the consumer electronics and automotive and industrial markets. Did you get those three? Automotive, electronics, consumer electronics, checkmark, automotive, checkmark, EV, autonomous cars, and industrial. I've been talking about industrial for the last God knows how many months. Now, Texas Instrument announced fourth quarter and full year results in late January. Revenue was up for $4.08 billion. That's an increase of 22% year over year for a really mature company. Technically, the stock is showing strong momentum, and it's up over 80% during the last 12 months. Earnings have seen a positive surprise and estimates over the last 4 quarters, and I'm seeing more upside ahead. I'm seeing a price target of about $225, maybe even $230 over the next quarter, assuming we see a melt up in the large caps, which is entirely possible with the massive stimulus coming into the market. Now, I would wait for a short pullback before entering either of these two stocks because their momentum levels are a bit too hot right now. And a pullback would offer a lower risk opportunity based on the volatility levels we're seeing right now. probably a good weight is 50-day moving average. Wait till both stocks hit the 50-day moving average or maybe the 20-day exponential moving average, and that would give you a nice little bounce entry short-term opportunity. Hope that helps. Folks, very few people know this, but there's a way to win in the markets even when you're wrong about the direction of a stock. Wall Street legend Chuck Hughes, he just discovered a trading strategy that's so powerful, he's been able to signal winner after winner after winner, even when the stock market moves against him. Now, Chuck is finally revealing to the world what he's found and how anyone can start using the strategy to pull potential profits today, and I mean like right now. Just click on the link below to see Chuck's trading breakthrough. And make sure to like this video. Subscribe to this channel if you're watching on YouTube. Stay ahead of the market, folks, by being the first to be notified when we post our next video.